everybody. It's Friday, March 8th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop those in the chat area, and we'll be sure to get to them during the show. Overnight markets had May corn down 3.5 at 434.5. May soybeans were down a penny and 3/4 at 1164.5, and May Chicago wheat was up a penny and a quarter at 529 3/4. Had a little bit of data out here this morning. The jobs report came back. Non-farm payrolls were up 275,000. Dow Jones estimates were looking for about 198,000. So that was pretty positive on the job side. However, one key indicator that's heavily focused on is the unemployment rate, which rose slightly to 3.9%. Stocks rallied off of those numbers. We've now since turned lower, just marginally down about 30 here in the Dow. We also had a cancellation from the USDA this morning, 110,000 SRW wheat to China that was canceled. And I know, good morning, guys. Good to see everybody. We're going to have a USDA report out here at 11 o'clock. We will have our thoughts in a war room session at 11:05. So that'll be a bonus war room here today. But wanted to kick it off. Dustin, I know we were talking before the show. You looked at basically overall how much wheat China has taken out of that big tranche that they've purchased, and then just kick around some thoughts there and see where we end up. So good morning, Dust.
Good morning, Dan. Yeah, so obviously wheat has been feeling the pain here the last couple of days due to these cancellations. So wheat's really dropped off. As a result, you look at last week's export sales report, they still have 1.348 million metric tons outstanding of SRW wheat to take for delivery, and they've only taken 567. So when you think about at the time they started the purchase program, funds were record short wheat. They blew out of that. It basically caused it sparked a $1 rally in the wheat market coming out of that first notice day timeframe. And then now we're seeing heavy cancellations from China in the wheat, just like we're seeing them doing in the corn. So I think it suits them for the market right now, apparently, but they didn't make sense at the time, the purchases, and now the cancellations on the flip side are obviously causing some major gyrations in the market. And that's just one of the risks that we have is they can throw their geopolitical weight around and it's going to cause massive market impact.
Yeah, it's a good point. Ben, I know you had some thoughts too there, just overall market makeup. I know we're, once again, to reiterate, we're going to have a report here at 11 o'clock. So what's some thoughts you could share this morning?
Yeah, we mentioned this the other day that corn had some work to do. It definitely had a nice day yesterday, put in some work, saw some significant buying above the 20-day. We're at that point. Is this pre-report short covering, or is this the beginning of trying to finally start to find some sort of seasonal strength? I think that we did see a lot of growers selling the last half of February as a lot of bills came due and a lot of basis contracts became negative. So, the question here is, has the grower sold enough to try to level that skew that's been against them on unpriced corn for a while? So I think coming out of today is pretty important. Can you string together at least a higher weekly close? I don't expect a ton on the report one way or the other than looking at how the USDA reconciles their South American numbers, which they've been reluctant to lower towards some of the estimates that have come out of South America. So, I think today becomes kind of a pivotal day. Looking at the chart, you could optimistically think that there would be some sort of a challenge of the 50-day moving average, which sits around 451. But we saw similar price action the week before where it can get above, in corn, where we can get above the 20-day, kind of shake the tree, run some weak shorts out, and then we fall all over ourselves. So, I think that today, Monday, Tuesday give you a pretty good idea of if we're starting to find that kind of seasonal strength, and if we have flattened the skew against the really large grower long. So waiting to see how we trade after the report today.
Oh, that's really good. And Dustin, we've talked a lot on this show just about spreads and different relationships, things of that nature. What's your thoughts there? We haven't really addressed that in a couple of shows.
Yeah, so corn spreads, you're saying just how they're shaping up.
Yeah.
Yes, they've been narrowing on this rebound. So it's kind of somewhat to be expected if you think about all the pressure was in the old crop contracts going into first notice day. That'd be the March, especially the March, May, March, July, but also March to Dece. And we saw spreads widen towards a fairly robust percentage of full carry, but not necessarily what you'd expect from the last time we were at a 2.1, 2.2 billion bushel carryout or growing from there. We still have some ways that we could go towards the end. When you see the market rebound, a lot of times you're going to see the spreads also rebound as they have been positively correlated to flat price. We are starting to maybe get to that point in the year where we could expect that to dislodge, and any future strength is that going to be because we expect our carryout to drop substantially? Only way that we think that would happen is if the market perceived safrinha crop to be in big trouble and all of a sudden our exports tick up. Otherwise, we're more than likely to be at a fairly sizable old crop carryout. And so if you think about going into, let's say, May, June, a couple of things that could cause that for markets to rise and spreads to widen would be that there's a new crop problem. Maybe we didn't get enough corn acres in the March reports. Maybe it's the dryness we're seeing in some of the western states right now, or that continues to grow. If there's a perceived new crop corn problem, that's not going to change the fact that we're coming into that year with a north of 2 billion bushel carry in from old crop. So that's where you could still see spreads widen as they start to crunch nearby margins, but then have a fear for new crop carryout in September 2025. So it'll be an interesting thing. I think one of the years that really shaped my opinion of that spread was 2008. Is that when we went to near $8 for the first time in new crop corn, we actually went to full carry. So July Dece went to full carry along that path on the way up to $8, even though there's an incredible tightness projected in the market. Is because we were having the flooding in Iowa early 2008, right? We were having a weather issue, and we had energy prices in the $130 a barrel, $140 a barrel for crude oil at the time. So the perception of forward demand of corn was growing from ethanol, yet nearby ethanol margins were crunched, and what we had left over for supply wasn't nearly as sought after as the futures market was showing for new crop. So it is possible to see spread widening once we get to especially we get to June, if it's all about new crop at that point in time. Right now, July Dece, that's probably the marquee corn spread to watch, is at about a 21, 22 cent carry. To get to 50% full carry, that's going to be like 25 to 26 cents for those 5 months. So
Very good. I know it's been a pretty slow news day, so we won't beat a dead horse. But Rylan, I know anything shaking out in the cattle side? It's been pretty quiet over there as well.
Yeah, it's still kind of the sideways pattern still, but we did see a little bit of cash trade yesterday. $2 higher were the early indications in Kansas and in Nebraska. So we're seeing about 186 for live start to show up in the South, kind of right where those offers were. I think the push back up to 187 possible if they're really coming after them, but slaughters are still behind last week by about 11,000 heads. So this has been kind of to the detriment of the futures. It kind of feels like here right now. Otherwise, beef was up. I mean, the market's just trading sideways. Seems like we're still going to try to hold that 25-day moving average. I think it just at this point, the supply narrative is so friendly that we're just kind of stuck right now. It seems like it's too high to buy and too low to sell. So we're just kind of leveling off here. And same thing in the feeders. We had a higher close, but we actually made a new low for the move in April. I mean, there's definitely some signs that we can make that next push higher, but it just feels like we're getting into this kind of choppy kind of pattern. So overall, not much news. I don't know what the market's really waiting for right now. If it's a big seasonal surge in beef prices to really justify what's going on, or if we're going to start picking slaughters back up. I think that's really what the market's going to be focusing on over the next couple of weeks.
What and how are packer margins sitting right now?
Not good, especially if beef prices are going to continue to, I mean, if they just kind of stay around here. I mean, I think the idea is that they're going to get a lot better as we start getting into the next 2 months, just with a rally in beef, as long as the cash doesn't move a whole lot higher. So.
Yeah. So are you still seeing pretty good indicators in terms of LRPs and things like that out forward? I mean, it's still giving guys a pretty good chance, ahead of the summer market, right?
Absolutely. Yeah. And everybody at this point, I think, realizes the importance of just staying protected at historically high prices. I mean, we know how this cattle market can be. It can be just celebration, kind of high price, and then all of a sudden you got a rug pull that you didn't see coming, just like last September. So I think everybody's learned from that kind of action last year. It's good that happened when it did. I mean, it's unfortunate, of course, but I think it just made everybody realize that having any kind of layer of protection in this kind of environment is paramount for profitability down the road.
Sure. And, you made a good point yesterday. And I think, as we've been talking a lot about the makeup of the corn market, if you were to see some sort of a recovery bounce, change in the outlook, I mean, it's been pretty cheap corn here for a while for these guys. I mean, the feeder market could look a lot different in 30 or 60 days. Is that a fair assessment?
Yeah, I think so. I mean, if there's any real seasonal optimism when we start to see the shorts puke out of the corn market, feeders are going to get a little bit nervous. I think that's going to be kind of the one real focal point just over the next couple of years is feeding margins, and if we're really going to try to encourage expansion. And next year, you've already got prices, at a pretty reasonably high level, all things considered historically. So, or just in environments where we need to expand, we would need to see new crop prices, I think, come down quite a bit more to incentivize it.
Oh, very good. Appreciate that. And as always, if anybody's got questions about, LRPs or cattle in general, please don't hesitate to reach out. Ryland's always willing to visit there. So it is Friday, and you know what Friday brings? It's Brian's Fun Fact Friday. So I hope you put a little work in here, Brian. What do you got for us?
Let's go, Brian.
Yeah, I appreciate it, Dan. Yeah, happy Friday, everybody. I'm assuming some of us will be visiting our local watering hole tonight or over the weekend here. And if you're looking for an icebreaker, if you see someone drinking a Jack and Coke, it might be a little bit on the morbid side of things today, but, Jack Daniel, the legendary distiller, was notorious for forgetting his combination to a safe. Happened to him. He just started kicking the thing, trying to get this thing open. Sad thing is, he ended up getting a blood infection, gangrene set in, and that was the untimely demise of Jack Daniel. So I guess the moral of the story is maybe keep a little cash on hand at all times.
Where did you find this stuff?
Sage-like wisdom.
So I don't know. You might bring that up at the bar. I think everyone might move away from you, but
right.
But just a thought you'd like to know about your old Jack Daniel there.
Nothing like starting your Friday with a little gangrene, I guess.
Gangrene, right? Yeah. Thanks for that, Brian. Yeah.
Nice.
Yeah.
Oh boy. Okay. Well, thanks, Brian. That was
a good one.
You're still undefeated, I guess. We're coming into the open here. Just about 30 seconds or so. Looks like they got May corn matching up around 434, just a slightly lower than where we opened overnight or closed overnight. May soybeans lining up about 1164, so pretty much in line. And May Chicago wheat is going to be about 528, slightly lower than where we closed overnight as well. Just coming in 4 lower in corn, 433.5. May soybeans down 5, 1162. And May Chicago wheat unchanged now, 529. As I mentioned, we will be back at 11:05 with a bonus War Room edition today. I'll give you some thoughts on the USDA report. and where we head from there. And as always, we are streaming live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Thanks a lot, guys, for the visit here this morning. We will be back at 11:05, and hope everybody has a great day.
Thanks, Dan.
Thanks, Dan.